If you're retired law enforcement or firefighter, are you getting your $3,000 a year tax deduction? No idea what I'm talking about? Stick around. I'm going to put some cash in your pocket. Welcome back, Furzonians. My name's Chris Barfield. I'm with barfieldfinancial.com. Go on that website, scroll down on the homepage, enter your email, and get the free newsletter that comes out every month. Learn all about fur stuff. Today we're going to be talking about the $3,000 public safety officer deduction. This should be something that is well known by everyone that retires. Unfortunately, in my experience, it's not. A lot of people don't know about this, which is interesting because typically in law enforcement, we're trying to game the system any way we can. Here's a benefit a lot of people are leaving on the table. What am I talking about? If you are retired, if you're still working, this does not apply to you yet. But if you are a retired public safety officer, you get to take $3,000 a year off of your tax return every single year. So let's dive into this a little bit. Public safety officer, what does that mean? Who is a public safety officer? That's IRS term for pretty much any type of police, fire, or medic. Okay, so it doesn't necessarily have to be federal. It could be state, local, city, whatever. So if you are in law enforcement of any kind, you're a deputy sheriff, you're a city police officer, you're a chaplain for the county police, that counts as well. And then, of course, all of the feds. So FBI agent, DEA agent, Border Patrol, Customs, deputy marshals, BOP, Pentagon police, all of that stuff, Capitol Police, any type of law enforcement counts. Fire, of course, federal firefighters, that's who I'm primarily talking to. But if you stumble on this video and you're a county fire or city fire, you qualify for this as well. This is not just a FERS or a federal benefit. This is all public safety. And then, of course, medics, any type of paramedic, ambulance, responder, any of that sort of thing. I don't think there's too many of those in the federal system. But if there happens to be one you're watching, you count as well. So pretty much anyone that would respond to a 911 call, somebody calls 911 and you respond, you're a public safety officer. In the federal system, if you have arrest powers or you guard something, if you have a badge and a gun, you are a law enforcement. You count as public safety. Fire, if you're a wildland firefighter or a structural firefighter, if you're a DOD or you're a firefighter, for example, at Naval Air Station Pensacola, you would count under the public safety. So what do you get for this? $3,000 deducted on your tax return every year for your FEHB premiums or your health insurance premiums if you're not under FEHB. For example, you postal employees that are switching over to the, PSHB. If you're a postal inspector, you're under public safety. So even though you're not technically under FEHB, if you're under the new system, you qualify as well. Any of you state and local, if you have your own, whatever type of insurance you have, you qualify also. So as long as your premiums, the cost of this is not medical expense. We're not talking about, you go to the doctor, and we're talking about your actual premiums, the cost of your Blue Cross Blue Shield, say. You can deduct up to $3,000 per person on your tax return each year. I'm going to show you exactly how to do that in a minute. Your premium that you pay, your insurance premiums, has to be more than $3,000 for you to get the full three grand. Otherwise, you get up to the $3,000. Okay, so if you're a single person and your health insurance for the year is $2,800, then you would be able to claim $2,800, not the $3,000. If your health insurance is $5,000 a year, then you would be able to claim the full $3,000. If you are married to another public safety officer, then you can both claim the $3,000. For example, my wife is retired FBI agent. I'm retired deputy U.S. Marshal. Together, we're allotted $6,000 a year on our tax return that we can deduct. Now, our health insurance premiums are only about $5,800 because we're in a high deductible health plan. So we don't get the full $6,000, but at least we get to claim everything that we, all the expense that we incur for our health insurance. If our health insurance was $10,000, let's say, we would be limited to the $6,000. Now, one caveat, if you're talking to your CPA about this and they say, or they start going down this road where there is a tax concept where you can have medical expense if they exceed 7.5% of your adjusted gross income and you itemize, then you can, deduct all of the, we're not talking about that. This is completely separate from that. This has nothing to do with that deduction. In this case, you get to claim this whether you itemize or take the standard deduction. So these days, a lot more people are taking the standard deduction under the new tax rules. So you still get to claim this. You may think, okay, Chris, this sounds a little bit sketchy. How exactly do I claim this? Let's go right here. Let's go to chapter and verse, right? You guys don't want to just take somebody's word for it. Let's look up the actual authoritative literature. Let's go to the Googles and we will type in IRS publication 721. All right. You guys may not know this, but the IRS has our best interest at heart always. They are looking out for us. And in their non-stop efforts to spread cheer and goodwill throughout the land, they create publications, these little booklets that are for us, different tax things that, information that can expand that you can go and research. They make one just for us federal employees. It is called IRS Publication 721, Tax Guide to U.S. Civil Service Retirement Benefits. So if you're looking for information on researching particular topics regarding the FERS system, or CSRS for that matter, it's on here. It talks about our TSP, talks about survivor annuities, talks about all kinds of different things that we will cover in future videos. But for our purposes today, it does cover the public safety officer. So we're going to come down here, rules for retirees, talk about choosing survivor benefits. When we come all the way down here, past the TSP, past the rollover rules, we talked about rollovers in the last video. Distributions used to pay insurance premiums for public safety officers. So if you're a retired public safety officer, and then it lists some of the things that I've already talked about. You can read this. I don't want to read the whole thing to you. It talks about the lesser of the amount of the insurance premiums or your $3,000. Come down here to the important part, how to report this. This is what your CPA is going to want to know. If you're educating your CPA because he doesn't know anything about this, this is what you're going to point him to. You're basically going to report your total distributions on line 5A. So what that means is this. Let's say you get a check from OPM every month, and then at the end of the year, your 1099, they paid you, let's say, $50,000 for the year. So you would report $50,000 on line 5A, and then report the taxable amount on line 5B. So what you're going to do, it's literally as simple as this. If they are paying you $50,000, you deduct your $3,000, and you're going to claim $47,000 of taxable income. It's really that easy. So technically, this is not a deduction. This is, if you want to split hairs, it's a reduction. It's a reduction in your income, your taxable income. So that's why you can get this whether you itemize or you take the standard deduction. This is also, if you're familiar with the term above the line deduction, you don't have to know that term, but if you're familiar with it, this is one of those. So you're literally going to just claim $3,000 less or $6,000 less or whatever it is that you're eligible for. And then they give you some other little tip here. You literally write in PSO on the line. So that's indicating to them that you qualify for this extra deduction. And that's why the amount of money that you received doesn't match the amount of money that you're claiming, because you're allowed to claim less. Okay, hopefully that makes sense. If you guys use TurboTax, I get this question all the time. TurboTax will walk you through this, assuming you answer the questions correctly. If you use a CPA, just make sure that your CPA knows about this. I get questions all the time. Tax season just passed. I was getting a lot of questions where people are like, my CPA doesn't know about this. So what we did, what is easy, I'm going to put this link in the description. But if you go to my website, barfieldfinancial.com, you go to the articles sections, you will scroll down until you see the Public Safety Officer Deduction Explained. I go through this in great detail. The easiest thing for you to do is send this link to your CPA. He'll have at the bottom, I have all of this resources, all these resources here. This law passed in 2006. I've got the IRS code. I've got a whole bunch of updated laws and so forth. Okay, so I'll put that link in the description. You guys can read it to your heart's content if you want to, review anything that I've talked about today, or you want to send it to your CPA. If you have been retired for a while and this is the first time that you've heard about this, you do have the option to go back and file what's called amended returns. You've already filed your tax returns, at least I hope you have, but you can go back and you can file amended returns, meaning like, hey, I messed up, I didn't claim this deduction. And if you do and you go back and file that for a few years, you'll get some money back. All right, so that might be something that you want to pursue with your CPA. Again, this is for retirees only. If you are still working, you don't have to worry about this, because all of your health insurance premiums are already coming out pre-tax. Every paycheck, they're fully tax deductible, so you don't have to worry about that. When you retire, that benefit ends, and so this is a sort of an artificial way to make up for it for you public safety officers. Read the article, send me questions if you have any, but other than that, please spread the word. Again, all of you federal agents, law enforcement, fire, public safety officers of any kind, federal, state, and local, you should be taking this every single year if you're retired. Had somebody recently, one last thing, had somebody recently email me, their CPA said, there was 2 ATF agents that were married, and the CPA said, well, all of the health insurance premiums is coming out of one person, retirement check. It was coming out as a deduction, so only one person can take it. That is not true. The new law that passed, it doesn't even have to come out. You could actually pay out of pocket, but you're both eligible for that. If it's covering 2 law enforcement officers, agents, whatever, fire, you're both entitled to that. Okay, read the law, read all this stuff, and you'll know it. All right, thanks guys. This is another video in the series. Everybody wanted to have these things, so I'm going to keep doing them as long as you guys appreciate them. So give me some feedback in the comments. Let me know if you want me to continue with these. Let me know if you didn't know about this. And if you go and file some amended returns, let us know how that shakes out. You should be getting some money back. All right. Until next time, you guys take care of each other and feed your TSP.